Hi, welcome to the Red to Black podcast. Here, you will learn how to invest in highly profitable private businesses to create abundant financial freedom. If this topic interests you, we invite you to subscribe to our channel. This podcast is hosted by Werner Minchel, ex-Marine aviator and current real estate investor, and Mario Parzino, current Marine infantry officer and business investor. Okay, hi everyone. Welcome to the Red to Black podcast. I'm Werner Minchel, and my co-host is Mario Parzino. The date is 17 June 2021, and the time is 2100 Pacific Standard Time. Mario, how the heck are you tonight?
I'm doing well, Warner. Hawaii is still 82 degrees. The bite has turned on, so getting some action on the fishing front. And no complaints. How's Wyoming?
Wyoming is actually really nice. It's quiet, and eastern Wyoming is a hidden gem. You have the Black Hills to your east, because we're on the eastern portion of Wyoming, and to the west of us we have the Bighorns, which has this amazing wilderness preserve called Cloud Peak. Just a phenomenal area. You can do all sorts of motocross, four-wheel vehicles, hunting. It's just a hunter's paradise.
There's some. Let me get this straight. There's some protein walking around this wilderness
all
area.
Sorts of protein. So
awesome.
Here's the thing, though. Since I was looking at the campsites, most of the campsites are about 8,000 feet. So at nighttime, the temperature drops anywhere from 50 to this Sunday. It's going to be around 30 degrees. So we just purchased a 4-season mountain hardware tent, same tent you'd see on Mount Everest. I went baller. And then we purchased some down sleeping bags from Marmot and some really heavy duty, really thick Thermarest sleeping bags. So the family is ready to roll.
Okay, so what would be the daytime temperature up here at this wilderness area?
Oh, daytime 70 to 80.
Perfect. So it just gets a little chilly at night.
Yeah, and this weekend there's a system rolling through, so it's always good when you're at 8,000. Let's say 8,000 feet and above. It's always good to plan with warm weather gear.
That's right. It can snow. It literally can snow at 8 to 10,000 feet. It can snow in July. Now, for the folks listening outside of the northern hemisphere, up in Wyoming, the Austrian ski team built a ski resort. Not a ski resort. They built a training center on a highway that runs between Wyoming and Montana. It's one of the most beautiful drives you can ever do in your life. It's called the Beartooth Pass.
Yep.
It links up, and the Austrian ski team actually built just a single little lift. But it's a mogul run. It's this big north-facing mogul run, and they did it because it snows there July and August. It never stops snowing there. It snows 12 months a year. Now they don't get a ton of snow, but it still snows there in the summertime.
Yeah, beautiful area. So, Mario, what are we discussing this evening?
All right, we're going to have 6 topics to discuss. Number 1 is money market funds. Number 2 is short-term bonds. Number 3, gold bars and bank accounts. Number 4, digital coins. Number 5, NFTs. And number 6, artwork. Let's get after it, Warner.
All right, you're going first. Get at it.
Okay, money market funds. So for the folks listening who are like, what do you do when there's nothing smart to buy? You stack cash. And if you want to ride out a storm in life, a financial storm, the best way to do that is to stack up a couple $1 million in cash. That's hard for a lot of folks to do, but if you have a savings rate, let's say somewhere around 50%, if you can live low to the ground and save 50% of every dollar you bring home. So this is take home income. What hits your bank account? If you can get to the point where you're saving 50% of that, I know that's difficult for most folks, but if you live low to the ground, it's possible for a few folks to do that. You're gonna have an issue. You're stacking up cash every month, every 2 weeks. Whenever you get paid, you're stacking up a little bit of cash. When there's nothing smart to buy, you're building that cash account. You got to do something with it. It's got to go somewhere. It shouldn't stay in the banks. You got to get it out of the banks. You got to move it to a location where they can't lend it out and lose it for you, or you got to get it away from the banks. The banks aren't as trustworthy as other institutions. So one of the topics we're talking about is money market funds, and you can move it into what I would recommend is Vanguard and put it in the money market account. Now, right now we got some bad news for you. Your interest that you're going to get from Vanguard is not very impressive. Warner, can you kind of unpack what it's invested in? So if you give them $1 or $1 million or 2 million, what does it go into, and what's your return on that money right now today?
Right now, Vanguard money market funds are invested in 4-week, 3-month, and 6-month maturities, and they're called T bills or Treasury bills. Now, here's a fun fact that most people don't know: 2 years to 10 years to 20 years to 30 years are not Treasury bills. That's not what they're called. That's what everyone calls them. They're actually called interest bearing notes. So there's a difference. The short term market, they're called T bills. Long term market, they're called interest bearing notes. On the short term market, it's just a place to store your cash and move cash around. It's called the money market. And the money market, most people are not familiar with it because it's a market designed for large institutions such as banks, which you just mentioned, and federal agencies, foreign agencies to all come in and trade huge sums of money, and also big corporations. So that's where Vanguard is currently parking money that you give to them. And what's interesting is we just looked at one of the Vanguard money market funds, the settlement account, and majority of their money is in government obligations, about 23, 24%, only about 1% in repurchase agreements, and then the other 75%, the whole big share, is in these T-bills. So why is that important? Well, in the past, if you were paying attention, Vanguard in their current federal money market holding account and in their actual money market accounts, they were actually making 1 to 2%. And the reason why is they were lending to banks. So that tells the listener something: ding, ding, ding. These banks are not reliable anymore. And a huge institution, Vanguard and BlackRock, know this. Those are the two largest financial institutions on the face of this earth. They have trillions of dollars under management. And if they're making those moves, they see something. So the majority is in the government bonds. Short-term treasuries or T-bills are not designed to pay out money. They're just designed as a place to shuttle cash back and forth.
Fascinating points. They're basically signaling to the whole world that the banks are not well positioned to ride out a financial storm. Quick story for you, Warner. I have a friend who was going to buy an asset, or he did buy it, but he needed over $10,000, like somewhere around 50 grand, to move into this asset and buy it. And it was, let's say, a collectible piece of American steel. And he was going to buy it for cash like this. He was going to go make he was going to show up and make a lower offer than the asset was worth, and buy it. And he was explaining to me that when he went to the bank and asked for the 50 grand, they were like, we're going to need 4 or 5 days to get you that money. And he's like, 4 or 5 days. And this was like, I need to go buy this asset like tonight. Like I need to, I need to get the cash today, and I need to go tonight and make an offer and like wave this in this dude's face and see if I can't get this asset. And the bank's like, no, the soonest we could get this to you is like 96 hours, 4 days from now. It's like, it's my money. It's mine. I'll go to a bigger city. Like, do I need to go up, do I need to drive 2 hours and go to a bigger city? And they're like, no, it doesn't matter where you go. It's going to take 4 days to get your money. And he's like, wow, 4 days to get my money. So there's a little experiment. If you ever buy a car or a truck and you do it in cash, man, it's hard to pull anything over like, well, I don't know, 5, 10 grand. It's hard to get cash these days. So maybe that's because they don't really have it. Thoughts on that, Warner?
Yes, correct. They don't have that cash. And if you look at any bank, typically they have 10% reserves. I just recently looked at Discover Bank. They have about 20% reserves. So Discover Bank's probably one of the better banks out there. Here's the challenge. Here's the rub. If you look at their deposits, I think it was 75% of their total revenue coming in. So the deposits take up the lion's share of the bank. So that 20% of cash they have, that's only going to go so far. If there's a run on the bank that's higher than 20%, they're out of money. And guess what they're going to do? They're not going to allow that to happen. They're going to start blocking off accounts, putting limits on those accounts. Now, here's the thing that people don't understand about banks or anything, any other institution that has to do with money. Anytime you give your money or an asset to someone else, we've talked about this before. You've now reduced your responsibility in terms of ownership of that asset. So when you give it to a bank, a lot of people argue, and people I've listened to on YouTube have said, you actually don't own that money anymore. That money is now the property of the bank, and they're now lending that out to someone else. So you don't even own it. They're lending out to someone else. So when your friend went to ask for the money, they either didn't have the money in the account or they had certain requirements of cash that they had to have on hand, and they couldn't pay him out because they would go below those cash amounts. So who the heck knows what was going on? The important point is when you're investing in these highly profitable private businesses and one comes up at a great price, what Mario and I are talking about in this podcast is wherever you put your cash, the goal is to retrieve that cash as quickly and as humanly as possible so you can swoop up that asset.
That's right, Warner. So folks will make an argument. Folks will say, but it's FDIC insured. It's insured,
They don't
Warner.
even. Yeah, right.
It's
They don't
insured.
have jack.
No, it's insured. And I tell people, okay, go get in
For how
line. Well,
much?
go get in line. Like, okay, when are they going to
Exactly.
pay you? Oh, it's insured. When do they pay out? Oh, you need to stand in that line. Oh, now you need to go over to that line. Oh, you need to file. Oh, it's now go home and get on internet. Now file this. Now, yeah, you might get your money back in a year or 2 years or 10 years.
Yep.
Yeah,
Here's
FDIC
a, here's
insurance.
here's an anecdotal story. When I was in the Marine Corps, I was the S6 officer in the squadron in K Bay, Hawaii, and I was flying the 53 Delta. Now, what I didn't realize is when I went to the squadron in the Marine Corps, they told me point blank, some officers, various officers said, your primary goal is an admin officer, and then your flying comes second. And I'm going, wait, what? You just put $1.5 million into me, and now I'm coming here, and you're telling me my primary goal isn't a pilot? That that fired me up big time. That's another story which we'll go into deeper into another podcast. The reason I'm setting the groundwork for my position, which was S6, which is communications, I remember one day the CEO of the squadron, or maybe it was the executive officer, that's the number one, and the number two, they said to me, hey, we need some printer cartridges for our printer. I said, okay, great. What's our budget? Zero. I said, what, where the heck am I supposed to go get a dang printer cartridge? So I end off on this goose chase across K Bay looking for a printer cartridge. And mind you not, I'm a certified 53 Delta and Echo pilot, which is the largest helicopters in the world, and I'm hunting down printer cartridges. I finally find the Navy, who's flush with cash. This Navy guy,
He's
he
a guy.
takes
He's
me.
a chief. He's a chief, right?
He's a chief. Yeah.
They got
He's
all.
like,
They got.
sir,
They got all the batteries. They got all the printer
yo,
cartridges.
yeah, sir, I got you covered. So I go to this Quadcom, which is a metal container, and it's an insulated one. It may even have an air conditioning unit on it. He pops this thing open, and he's got this beautiful wood shelves in there. Just, I mean, compared to what we have in the Marine Corps, which is ricky rackety crap. We just put together whatever we can to support anything in that organization. So I look in, and I see these wood shelves lined with printer cartridges, just stacked to the brim. And he's like, "Take how many you want." In my mind, I'm thinking I'm gonna take 20 or 30 of these, but I said, "No, Master Chief. Hey, thanks, I appreciate it. I only grabbed a few." Went back to the squadron. The reason I share this story with our listeners is you think that the government is going to help you out, you are sorely mistaken. Mario and I was in for 9 years. Mario's been on 17 years. We understand how bureaucracy works. And I would say the Marine Corps and the military is one of the best run bureaucracies. But when it comes down to it, when you're talking about efficiency, good luck. I mean, good luck. You think the FDIC is going to cover your butt? Have fun with that. While all the opportunities are available for you to buy, you're going to be haggling in a line with hundreds of thousands of other people, probably riots, who the heck knows what else. It is not a good strategy.
Warner, it sounds like it's a good idea to make friends with senior chiefs, master chiefs, company gunnies.
Exactly. So if you have the inside track to the Treasury Department, right, or the FDIC department, whatever that organization is, then yeah, maybe you'll be first in line. But I guarantee you, 99.99% of the people do not have that connection. So if you're in that 99.99%, put your money elsewhere.
So, what I think is a good place to start is to move your money, whatever money you have, keep 1,000, keep 5,000, keep 10,000 in your checking account. Move the rest of your money into either Vanguard or Fidelity, TD Ameritrade.
And just as a disclaimer for people listening to this podcast, let's say this, Mario. We are not providing any financial information. When we say you, we're talking about you and me.
That's right.
We're giving you only advisory information. We're not financial specialists. We don't have SEC licenses. We are just two dudes talking about finance. And if this stuff interests you, you can take the knowledge and do whatever you like with it. That's
Thank
our
you for that,
disclaimer.
Warner. So,
Yeah.
as a recommendation to you, Warner, please don't keep more than a 10 grand, 20 grand in your checking account. Move your cash to Vanguard. Don't believe the
Okay.
FDIC. Please don't believe the FDIC is going to insure you. Anything else we need? Go ahead,
So
Warner.
on that, no, no, no. On that rec, we're going to move to topic number 2, which is short-term bonds. So let us get a little bite out of that one, if
Yeah,
you
so
would, Mario.
short-term bonds are a strategy. You could kind of ladder some bonds if you wanted to say, well, I want every year, every 1 to 3 years, I'm going to buy an asset, and I want a pile of cash ready for me to go every 1 to 3 years. The problem with short-term bonds right now is they're ridiculously low yielding. So you're not really making much progress from a money market to a short-term bond, and you're losing liquidity. You got to sit there and be patient until that matures. You get your cash, then you go and buy your asset. So you're giving up some liquidity, but you're gaining a ton of bit of yield. Can you kind of read off or kind of describe going from like a 1 month all the way out to the long bond, what we can get in some short-term bonds or some mid-term long bonds?
Yeah. So what we talked about in the past was 1 month to, well, that the treasury issues normally, what did I say, 1 month, 3 month, and 6 month. Those are all T bills. Anything beyond that, 1 year, 2 year, 3 year, those are all interest bearing notes. So let's start with the 6 month T bill. That's
Woo,
0.04%. Oof.
not a lot, not a lot.
1 year, 0.04%. 2 years, 0.16%. 3 years, 0.31%. 5 years, 0.8%. 7 year, 1.28. 10 year, 1.52. And then 20 year, 2.22. And 30 year, 2.30.
All right, so let's pause. Let's go back. Let's pause on that 5 year. So if we break that down, if I'm willing to give the federal government a pile of cash for 5 years, I can get 0.8%. Is that correct, Warner?
It is, and I have a concern which you could possibly answer. So, people, as if you do or you don't know, bonds are they're the inverse. So the yield on a bond, it's not an interest rate. The yield is inverse of the stock price. Excuse me, the bond price. Correction. So if we're getting low interest rates, bond prices are high. Is there a concern in your mind buying this bond at 5 year for 5 years, and when 5 years hits, interest rates are through the roof, and your bond price is now dropped in half?
The way I look at it, Warner, is pretty simple. I say, am I willing to give up my liquidity for 5 years for 0.8%? The answer is no. I want that liquidity. I'm willing to pay. I'm willing to eat that. I'm willing to suffer and endure that loss of that 0.8% for 5 years so that I could do something tonight. If tomorrow, God forbid, tomorrow we wake up and something happens pretty bad and we have an opportunity, I can execute. I can execute tomorrow. If the numbers make sense, if there's a guy that needs an immediate exit for some reason and the numbers make sense, I can write him a check tomorrow. It'll clear. If
Here's the difference between you and I and a huge billionaire. A billionaire may park his money in there because he's got so much money. He's hedging his risk on different levels. But for you and I and individuals who are listening to this podcast, you're not going to have the billionaire level of money. So your main goal is to preserve that capital and access it as quick as possible so you can make smart decisions. And go ahead, Mario.
Yeah, Warner, I think going. So, how do you ride out a financial storm? Stack up a couple million, and that's primarily just in money market funds. If you've got north of $2 million, Warner, then we could start looking at some other strategies. But right now, at our current level, we're good with money market funds. I think there is a play down the road if interest rates move, if we get a little bit higher interest rates. I think there's a way to ladder short-term bonds and take out a little bit of yield while we're waiting for another position. Let's say we only buy a business once every 3 years. We gotta be patient for 3 years for 3 year periods. Then we could do something like that and do some short-term bond purchases. But right now, they're paying so little, we don't want to give up our liquidity for that kind of yield. Those are my thoughts on short-term bonds, Warner. Anything else to add on that?
Yeah, I mean, I think in short-term bonds, I mean, whether you're talking about treasury bonds or great corporate bonds, the challenge is that the inverse correlation between price and yield. Right now, you have record high price. I think it's record high prices in bonds and record low yields. So if you're not an expert like Jeffrey Gunlock and you're hedging your bets in other countries, or you have access to that type of markets, and you're hedging everything against each other, I think a bond right now is a pretty dangerous move because interest rates, let's say what if we hit Weimar Germany, where the next day, in a few days, the whatever the currency, I forget the name of it, the Deutschmark, whatever the heck it was $1 trillion for like a loaf of bread. It was insanity. Your money is boom gone. So that your bond would have been worthless, right? You bought so there's multiple things to think about. With the two things to think about that Mari and I always come across, and it's what everyone talks about in every single financial circle: are we going deflation or inflation? Those are the two most important things, because when we go inflation, you lose the purchasing power of your money. When you go deflation, ooh, that stack cash that becomes very, very valuable. So
That's right.
those
That's
are the
right, Warner.
really only two questions. If you and I've listened to hundreds of hours of financial podcasts from George Gammon to Real Vision, multiple other guys, and those are the two arguments. This guy
That's
named
right.
Lacey Hunt talks about when you have tons of debt, it actually creates a deflationary environment. If you actually look at most recessions, they start out inflationary, which is a bump up inflationary. Weimar is like just a crazy, crazy anomaly. But there's usually a bump up in inflation because they print a lot of money, a lot of debt, and then it drops off the deflation. That's usually how they all run. So to answer your question, I'm not really interested in the bonds. I like something like a money market, which is just a straight up, I'm giving X to the government and they're giving me back X. Now, my only concern there is the government defaults. If that happens, then we're in a whole different scenario.
Yeah, we just homestead. We go out to Wyoming.
Yeah,
We homestead. That's
exactly.
fine. I'm gonna elk hunt. I'm gonna elk hunt the. Is it called the Cloud Peak Wilderness Area?
Cloud Peak, yeah, wonderful,
Cloud
wonderful
Peak. Yeah,
area.
I'm gonna
Huge.
just elk hunt.
13,
So
13,000 feet, a
yeah,
little above 13,000 feet for the Cloud Peak.
yeah. I'll just elk hunt. If there's total collapse, you'll know where to find me. All right, let's go into number three: gold bars and bank vaults. So some people will say, "Well, I could hedge against inflation with gold," and that's true. That's a pretty good way to value the dollar. The dollar and the gold are a kind of they work in two different directions. So when there's hyperinflation, gold is getting more expensive. When there's deflation, gold is going down. So let me say that again. Correction, they're not going in different directions. They're going in the same direction. So you got inflation, hyperinflation, gold's going up. You got deflation, gold's going down. So it is a hedge on certain things. It's a hedge on inflation. It doesn't help you out when there's deflation, but it is a hedge when there's hyperinflation. So, if you want, there's other things I like besides gold. There are hardware that you can buy at a certain type of store that sells hunting gear. It's highly machined steel. That's what I prefer over gold bars. But if you wanted to put a little bit of gold bars in your portfolio, got it, no problem. Now the problem is, where do I store those gold bars? That's an issue because if it's in the bank vault and the bank is closed on a bank holiday, you got an issue. Well, right when there's opportunities to buy something, I got to go down to this bank vault and wait in line. And it's, oh, by the way, it's closed. So you got this storage problem with gold bars. Is like, where do you keep those things? Where do you keep those suckers? Well, you probably put them back in the ground somewhere, and you have a carrying cost. You have to pay for somebody to watch over those gold bars. So I'm really I don't like gold bars. I don't like other than what I just talked about is a certain type of pressure money. You only need one or two of those in your vault, your home vault. So what are your thoughts on that, Warner? Gold bars and bank vaults.
I think the most opportune time for gold is when you're fleeing a country. In terms of coins, people have known to put them in there.
Yeah, I
Different
concur.
individuals fleeing different countries. I forget which countries, but they would sew the gold and jewelry into their jackets. We talked about this before, and they'd walk out of there.
No, there was a certain tribe in Germany in the 1920s and 30s that walked out into Switzerland with gold, and yeah, they knew what was happening. They were pretty wise. You know that there were some pretty wise gentlemen in this certain tribe that could see.
And we may get to that point.
Yeah, we might move up to Alaska, or we might. I mean, you and I, we're prepared to go to New Zealand and other locations, but that's yeah. Nowadays, really, I just would move all my money down to New Zealand, or I'd probably put it in Singapore, and then I just physically move to New Zealand. But it's all digital nowadays. I don't have to. I can instantly move my money over to Singapore and exit pretty quickly. It's actually getting the 206 of the Platus down in New Zealand is going to be a challenge, but there's also a lot of water you can sail on down there.
What about talking about gold and juxtaposing it against the money market? What are the big boys like Warren Buffett, Ray Dalio, that guy from Boston? What's his name?
Seth, yeah,
Seth
Seth, yeah,
Klarman.
his name's Seth.
What are they? Jeffrey Gunlock. You may not know what they're all doing with their cash, but where, if you know some of those guys, where are they putting their cash
Well,
right
I can
now?
guarantee where they're not putting it, Warner. They're not sitting on collectively. Let's say collectively, those gentlemen are not sitting on trillions of dollars worth of gold bars. So they have it in accounts at different institutions where they can make big moves quickly. They're liquid. They've got a bunch of liquidity. They don't have to go down and get their get their gold and then go sell it to someone else. They are in, you know, and these are very sophisticated investors, and they've got very sophisticated companies helping them to deploy that capital and to manage that capital. But no, they're not collectively in trillions of dollars in gold bars, but they do have lots of liquidity.
The reason I ask that is I always bring it back to the purpose of this podcast, which is investing in highly profitable private businesses to create abundant financial freedom. The only way to invest in a highly profitable private business, that's a tongue twister, is to have a stack of
That's right,
cash.
Corner. That's right.
So what we're providing you in this podcast is our thoughts on where to store your cash, where you can grab it as quickly as possible. And Mario's right. The challenge with gold, let's say I buy gold, I go bury it in the bighorns. Well, then it's like let's say I'm down in California, like I usually am in the wintertime, or Hawaii, and there's a huge opportunity to buy something. And Mario's like, you need 500,000 right now. Mario, give me about a week. Okay, I go on a plane. No, it's locked down from coronavirus. Give me 2 weeks. No, it's locked down. Give me 3 weeks. Okay, I finally make it over there. I get out to Cloud Peak Wilderness. They just had a 10-foot snowstorm, or they have 10 feet of snow on the
Get out your
ground.
metal detector, Warner.
Okay,
Get
so
out your metal detector.
then I look for a backhoe. I can't get a backhoe, so then I'm digging for 2 weeks to get it out. Now I get to the ground. The ground is hard as heck. I have blow torches on it. About a month later, I'm like, yeah, Mario, I'm almost there. I'm almost there. So I don't mean to laugh about this because
No, but
we may
it's
eat
that
our
silly.
words
No,
in the
it is that
future.
silly, Warner. It's like when you actually need it. When it's like, hey, we got to move. We got to move, Warner. We got an opportunity. We're flying into wherever we're going. We're going to meet with this gentleman. He needs some help. We're going to provide that help if he wants it at the right price. You're like, no, I got to go dig. I got to dig out of a snowbank my gold. It's just so ridiculous what people do, but I get it, man. People are trying to they want solutions, and there is no good solution, folks. It's suffer and endure until there's a buying opportunity, and there will be.
Well, here's the challenge. This is one thing as an investor, and this is especially for newbie investors. One thing you really want to watch out for is what the crowd is doing.
That's right.
Everyone's saying gold, everyone's saying Bitcoin, and it goes back to what we talked about in one of our past podcasts, which is if you don't understand the underlying fundamentals of gold, like there's a gold company called Gold, Barrick Gold Mines, and I think Warren Buffett was investing in it, maybe still is. Do you know how much it costs to take the gold out of the ground? Do you know how many mines they have? Do you know which mines are at risk of being taken by a local government? Do you know what the life of that mine is? What's how much money does it take to come out of the ground? Do you know everything about the gold industry? There's guys that do. Do you know everything about the Bitcoin industry? There's guys that do. If you don't know anything about those industries, just be very
That's right.
careful about what you're buying because first of all, gold. First of all, you have to make sure you're actually getting a full 99% gold actual coin. How do you know they're not reducing it? Do you know that you've got a bad batch? There's a lot of things to think about, right? So you really,
It's easier just to stay. It's easier just to stay away from the stuff. Just folks, just don't even touch the stuff.
well, I wouldn't say don't touch the stuff. I would say make your own informed decision as to what you. We don't. We're not here to tell you what to do. We're here to give us. Obviously, Mara's opinion is he's not going to touch it. My opinion is do your own analysis. Understand the carrying costs of gold. Understand that there's still risks with the money market. I mean, you don't know what if Vanguard is up this financial engineering, there's some fraud. Next thing you know, they lock out the damn money market account. You can't get to it. So there's risk everywhere. It's really just ascertaining our goal here with this podcast, and we'll go more in depth in other podcasts, is what are the different areas, silos where you could park your cash, and what are the different risks and rewards that Mario and I see. That's really the whole goal of what we're doing this podcast is to have this conversation to bring to light our thoughts, and then through our thoughts you have thoughts as listeners and you engage with us. We'd love to have you engage in the comments, and then you go read and get other thoughts, share them with us, and we all work together as a community to figure out what decisions each of us are going to make through the information from everyone else. That's the whole goal here.
That's right, Warner. It's about information. It's about doing the due diligence, doing the nug work, doing the pencil work to make an informed investment decision. You got to do your own work. Let's go to topic number 4, which is digital coins. The only digital coin that I like, there's one digital coin I like. There's one stable digital coin I like, okay, folks, and that is PayPal. It's perfectly pegged to the US dollar. So put as many dollars as you like in PayPal, and you can move it around and pay your friends and pay
I
people with
have
it.
issue. I have issue with that because
All right.
I've heard stories of people getting locked out of PayPal. So there's the risk to PayPal, and the challenge I have with PayPal is where I would actually. I mean, I see what you're saying about PayPal. It's stable. It's a challenge because Bitcoin.
It's a digital coin. It's a digital coin
It's
that you
just
can you can
but
exchange.
here's the challenge. It's an administrator can come in and lock out your account at any point. Whereas Bitcoin, it's on a ledger, and you have your own private and public key, and no one else can take your. Well, the FBI can because they just know how to crack it. I mean, they just can crack anything. Just a
That's
side
why
note.
no one can prove. That's why no one can prove that you can't crack that code. No one can actually prove. There's nobody in the face of the universe that can actually say, "Yeah, it can't be cracked." And you're like, "What about an AI
except
computer
the
at
except
Google?
the
Can it crack it?"
except Johnny 10-year man at FBI. He cracked it, man. He got up. He had his cup of Joe, man. He had a scone from some local DC bakery. It was probably delicious, local berries. And he just went in there, man. He just popped up his computer, did a few searches, found the Bitcoin, just ran it through the software and cracked it, man. That was it. So done.
Oh, so
Bitcoin's
Warner,
over.
it's Warner. It sounds like you like Bitcoin more than PayPal
I
digital coins.
no
So how many Bitcoins do you own, Warner? Share it with
I own
us.
zero. I don't like
Oh,
either of them because PayPal they can lock
I
you
know.
out. In Bitcoin, you could put in say $60,000 and then a few weeks later you're at 30,000. So
That's right.
I don't like either of them. I always point back for me. I always point back to the money market, and here's why. Vanguard and BlackRock are not leveraged out the hilt. Now, the issue with Vanguard is, which I've read before, is there could be some issues in the future. And people have talked about this with ETFs, and they've built a huge fortune on ETFs. And the challenge with ETFs is people are buying it. It's against our philosophy. They're buying it every step up the rung. So they're buying it at companies at any price in an ETF. So when things go sideways, the returns of the ETF just go way down because they didn't buy on value any of those businesses. They're all bought anywhere up the rung, right? Mari, does that make sense?
It
So
does. So how does that connect? It would just slow down and tell us how that's connected to the money market funds of Vanguard. So if EFTs
I
are
actually don't know. Can you answer that?
okay, what was the repeat the question, Warner?
So I didn't really ask a question, but it's you're bringing up a great question. If let's say the ETFs go down, a bunch of them, because all these companies start tanking, and the ETFs are all tied to them, and Vanguard starts hemorrhaging cash, will that will that somehow affect a siloed fund that's invested solely in the U.S. government or transferring money to the U.S. government? Your thoughts?
It shouldn't. It should not. So if those, which are basically mutual funds, but they're traded like stocks, so they own a portfolio of companies inside of a kind of a shell that's traded like a stock. So it's a mutual fund that's traded like a stock. If that price is crashing and they're exiting people's money, that's really a one for one. It's a silo of investors and companies that are in those ETFs. That should have no bearing on a second fund, which is short term loans basically to the U.S. government. There's zero right now. There's zero commercial paper in the money market. Vanguard money market funds really they're not lending to they're not doing commercial paper, and there's zero repurchases. It's 75% U.S. Treasury bills and 25% U.S. government obligations. So they're lending it to the United States government at a short duration, and they're getting back a 0% yield right now. So if there's an issue in basically the S&P 500, whatever kind of companies are going through issues, and the share price drops, that should not affect money markets. Now, in 2008, Warner, the 2008, yeah,
They
2008 or
broke the buck.
early 2009, it broke the buck. Now everyone got nervous, and rightfully so. But here's the reality, folks. It was like 99.999% of the value was still being returned instantly in those accounts. It didn't break the buck and
Do
go
you
to
know?
50
But do you
cent.
know who broke the buck? It wasn't small. It wasn't small funds like Vanguard. It was huge institutional funds that broke the buck. So it was a different. There's money markets that that allow us to invest. These money markets that broke the buck, from my research, wasn't funds we could invest in. Those were huge financial institutions doing their chicanery that caused that.
That's right. That's right. Most people don't realize the size of the money market isn't the money market funds. The size of
Trillion a day in money markets transfer
jeez, there's a lot of money sloshing
in
around
the
every day.
U.S.
So say that
alone.
say that again for every day, folks. Every day. Let me say that 24 hours. How much is sloshing around?
Well, that's a trillion, and that's from a phenomenal read, which you'll read for hours. It'll probably put you to sleep. Called Stigum's Money Market Guide. Mario, when I told Mario about the name, he was half laughing, half going, "Are you messing with me?" Yeah, Stigum Money Market. It's a whole book on, like, literally a thick textbook on money markets. So when they wrote that book, whenever that was, it's a textbook for like college students or finance students. It was a trillion.
$1 trillion a
That's
day.
still
Yeah.
huge.
So that's massive. It's a massive, and the bond market is way bigger than the stock market. If you look at all the bonds, let's just say in the United States, all the corporate bonds, all the municipal bonds. I mean, this for folks not listening in America, like Florida will build a turnpike every decade. They need more. There's hurricanes down there, and they need to move people out and through. And there's a lot of traffic, so they'll issue like a Florida. They'll raise money through bonds, and you can basically buy a or you can lend money backed on this turnpike, which isn't a horrible idea, but
So
this is
going
the bond market. Go ahead, Warren.
so going back to, so we don't get too far off topic, because you and I love to roll off topic. We are focusing on Bitcoin. So if we're gonna, or digital coin to be correction, digital
That's right.
coin. So are there any benefits to investing or to taking your money and parking it in a digital coin?
Yes, there are. It's one. There's one. They should be traded on their utility. The ability to be able to move across borders to people to wherever you need to. You can move cash. I don't have to drive the cash to places. I don't have to. It's faster. It's a faster system than doing a international bank transfer. I can move money faster with a than I can with a bank to bank over international borders, or even really in the United States. That doesn't matter if it's international, but that's primarily where you're suffering for multiple days.
Here's my challenge with digital coin, which I say is equivalent to the US dollar. And I just thought about this. The US dollar, obviously it gets devalued because the Fed prints money, into thin air. The challenge with digital coin is there's this mania around this what's people consider a currency.
Scarcity. There's
There's
mania
not
around
really
scarcity, and there is no scarcity, folks.
there's no
You can create. There's
scarcity.
unlimited digital coins. Like I can get another one. We'll create. I mean, you can spin up a digital coin. Like now, there's folks that are like making money. They're selling these things into the universe. They're selling these digital coins and making money. They're pro digital coins, but you can't value these things based on scarcity. You can value them, which you should, based on utility. But there is no scarcity. That's ridiculous.
So I would say the only utility of Bitcoin right now are two things, and I'm probably missing a few, is your ability to transfer it across borders, like you said, and number two, the encryption. You own it. If there's multiple ledgers across the world, that's why it's slow verifying. Hey, Werner's Bitcoin here. Okay, public key, private key. I verified it over here in Belgium. Okay, I verified it over here in Switzerland, and then another guy verifies it somewhere in South America. So it's like there's multiple verification steps that make it extremely sound, and it proves that it's yours. Now, my challenge with that system is the coming regulation where it's accepted, because at some point you have to take that Bitcoin and exchange it for dollars. That's where I'm going, okay, well, what's happening at that point? Is the government now charging me 50%? Are they levying a tax? There's just so many unknowns when I go from Bitcoin to American currency. Now, a lot of guys who do it all the time will probably have very insightful comments. Mari and I are really newbies. I mean, we don't even trade cryptos.
Don't own any of it, but I see its utility. I don't think it gives you much speed when it comes to buying a private business. That's not a currency that most gentlemen want to receive, is a bunch of cryptocurrency or a bunch of bitcoins to buy a, let's say, a beverage business in Wyoming. They want good old fashioned dollars, or they want a transfer of US dollars to ride out a storm, or they're done. They're exiting their position. They're moving on in life. And
Well,
like, go ahead, Warren. Go ahead.
here's another interesting point I just thought about. So we when you're looking at the dollar, everyone, whether you like the dollar or not, everyone respects the US dollar. The trust behind that dollar is phenomenal. When you look at Bitcoin, how many people would you say trust and respect Bitcoin? Because that's a huge issue no one ever talks about.
I'd say it's less. I'd say it's somewhere maybe around 50%. Maybe 50% of people believe that Bitcoin's unhackable. Which, I mean, there was a gentleman we had on this podcast that made a great point. He said there's basically a bounty out every day to try to crack this thing. There's a massive amount of value. Whether it's real value or perceived value, there's a bounty out every day to see if somebody can crack this. And right now it's withstood the test of time, but the test of time is not very long. And there's AI is coming online. There's going to be some very interesting developments in AI, folks, and no one can guarantee you that this thing can't be cracked.
I think the main issue for Mario and I, why we wouldn't invest in it, or not invest, but park our money there, is because of the insane fluctuation. And you may say, well, hey, there's these smaller coins that are tied to the dollar, but you're like, there's no guarantee that those coins and the encryption and everything else is going to work. Bitcoin is I guess kind of proven itself on the encryption level. So you're like, okay, I got Bitcoin and Ethereum. Ethereum's is supposedly a lot more secure and can transact a lot faster. I've got these multiple possibilities, but yet the challenge Mara and I run to, it's like, oh man, Okay, it's going to take us $1 million of our own equity to invest in it. We just popped into Bitcoin. Oof, Bitcoin's down at 10,000. We bought at 60.
Let's go on. Let's move on to number 5, NFTs, non-fungible tokens. What are your thoughts on NFTs, Warner?
I think NFTs are a great idea in the future where, for example, I'm a photographer. So if I can take my digital art and put it on the internet, right, into the system, and it's proven that I own that photograph, and then anyone can use it, and anyone that uses it anywhere in the world on their website, when that system sees that that's being commercially used, they'll be charged a Bitcoin, which comes my way. I think that's extremely powerful. If the art that you're using is used in a commercial setting, meaning our definition of investment, something that pays you to own it, I own it, I created it, and now I'm getting paid because someone else is using it in a commercial setting for marketing for his business that makes money for himself or she and a family. So that's how I look at it.
Interesting points, Warner. Interesting points. Yeah, for a photographer, there's going to be a ton of value if you're making these NFTs. You're going to be able to get some revenue. I'm interested in the clearinghouses, the businesses that are going to provide the platforms to trade NFTs or to provide a clearinghouse. Those are interesting businesses. Somebody's going to win in that space. Probably one or two, three big players will win in that space. Right now, I don't think it's clear who the players are, even who are just going to win. But down the road, those are going to be interesting businesses to look at and kind of see if you can unpack these clearinghouses. And ultimately, they're going to be profitable because there's going to be every day there's going to be images and NFTs loaded up onto them, and there's going to be transactions occurring. And they'll take a little cut. I mean, if it's kind of like the Chicago Mercantile Exchange, it's a wonderful business. If you want to sell Japanese persipid fruit futures on the Chicago Mercantile Exchange, that's a wonderful place to do it. Corn, anything, hogs, cattle, everything's sold up there in Chicago. It's a great business. I love the. I spent 3 years of my life in Chicago, and there's some late nights in downtown Michigan Avenue, and we won't go into that on this podcast. But Chicago's a wonderful place. That Mercantile Exchange was a wonderful business. Obviously, it's a little too big for our britches, but those are my thoughts on NFTs. Anything else on that, Warner?
Yeah, multiple other things on NFTs. So to recap what you're saying, or what we've both said, is I look at it in terms of if I have some art, like say I'm a photographer, I am a photographer, or say you're a photographer to our listeners, or you produce any other type of art, and that art can be used in a commercial setting, that just creates, as we talked about in another podcast, that creates another drip for you, for your silo, for your cash flow silo. So it's like a small player in your whole game. But if you can get your art up on one of these exchanges you're talking about, then that's a useful use of your time.
It is. It is, Warner. It absolutely is.
Yeah, and then time in terms of the exchange, of course, if you can invest in the exchange. Now, for us as a private business, that's probably a little bit out of our league because we're not versed on the technology. I mean, I know technology used to program, but when it comes to buying like highly profitable private businesses, Mara and I are more like nuts and bolts, firearms,
That's
bourbon,
right.
whatever
That's right.
whatever it is, right? Just simpler businesses that you can wrap your mind around. And usually a lot of those simple businesses, I've met people down in the Caribbean. This one guy had a 80-foot, 100-foot sailboat. I forget, beautiful sailboat. The guy started, I think, in the carpet industry in Dalton, Georgia, which is now smoked.
That's right.
So it's like these simple businesses create a lot of millionaires. I'm kind of getting off the topic. My point about the NFTs is I think it's a great opportunity in the future to either own the exchange or upload art that you have because you're already involved in the art some way, shape, or form creating it. And then in terms of parking your money there, it's like basically art, but it's a highly speculative art right now, and it's questionable. Some of the individuals, the wine merchant in New York and New Jersey, if what he's doing is art. I mean, it's art to someone else.
It's.
It's not
I
art to
mean,
me.
you can't. It is art. You can't say it's not art. it's funny. I like what he's doing. His empathy, his tactical empathy, or let's say his to build people up. Like I have a lot of respect for him. I don't particularly care for him selling at this point selling NFTs into a bubble. I think it might be a little predatory, but the wine merchant, I have a lot of respect for and admiration. I think he's a net positive in the universe. So I have no issues with him personally, but selling NFTs. How many? So just for everybody, how many NFTs do you own, Warner?
I own zero NFTs, and here's the reason why.
Yeah,
It's a new commercial market. It's untested, and the reason why we always go back to the money market is because here's the one reason. This is we forgot to mention this, Mario, and what you and I talked about. There's $1 trillion of wealth flowing around on a daily basis. Now, what that means for the normal investor is that prices are going to be extremely stable and extremely equalized because there's so much flow. They've worked out all the kinks of price variations. It's just happened so much that you're on such razor thin margins of the fluctuation. But when it comes to NFTs, I guess there's a bunch, but it's not a proven long-term market. So you have no idea really what's worth what because it's untested. So you're going to park your money there as a store of value. Where I don't think most guys are doing that. What most guys are doing is they're going in, buying it, and then selling it to the next idiot and the next idiot until it all crashes.
that's right. That's right.
So
You're
we're
flipping it,
kind of
flipping it to the next
in these
person.
past few topics. We're kind of going off the cuff here for our podcast listeners. The reason why is we're just kind of thinking through it. And this is the way that Mara and I are talking, how we're going from point to point, back and forth, here and there. That's, in our opinion, we advise you to think that way. Just think it through. Look at it from this angle. Look at it from above. Look at it from below. Talk to Mario. Talk to your friend. Talk to me. Whoever it is. Get all these different angles, and through all that, you'll start putting together patterns, and you'll start seeing your blind spots with the support of other people. And when you put together all these patterns
That's
and
right,
you
Warner.
uncover all these
That's right.
blind spots, you'll start seeing, oh man, this is not such a great investment because what it all comes back to is what we talk about with our investment strategy: persistent and consistent. Is the NFT consistent? No. Is it persistent? Yeah, it persistently goes on. Is the money market persistent and consistent? Yeah, it's one of the most consistent things right now, and it's been proven over a long period.
Excellent points, Warner. Excellent points. I'd say that everyone is blind to their own blind spots. However, your friend, a close friend of yours, is not. So everybody has blind spots, but if you have a close buddy who's looking, calling turns for you, he's going to see those angles that you can't see. And everybody, I have multiple blind spots, and I'm fortunate enough that I have a close friend in this universe that can call a few turns for me, both in finance and in relationships and let's say decisions. Emotional, yeah, so there's another one. When you're operating off of emotions, if you can have a guy that's super rational in your life, he's not emotionally invested in the situation, he's bringing you a fresh drink of logic and reason. And you need that. You need to call a buddy. Hey, I got a mission profile. I got to brief you on a mission, Warner. Now he's disconnected to this. He's not making a decision. He's not going to give you advice based on emotion because he's not in the situation. He's detached from it. He's seen angles. Have you thought about this? This could lead you down the wrong road.
Yeah, and building on that point, if you're going to invest in say an NFT, pick a few guys you know that love NFTs and pick a few guys you know that hate NFTs and get both sides. Do the same thing with the money market, do the same thing with gold. And what you'll start finding is the guys that love it are going to tell you everything that's great about it, and the guys that hate it are going to tell you everything that they believe is horrible about it. And what you start getting is this beautiful picture of what's really going on. And at the end of the day, you'll never know 100% what's occurring. It all comes down to, as we talked about in the past podcast, which is probability. But if you can get your probability down to almost certainty, you'll do a lot better. And the way you do that is about finding things that are consistent, like an Oracle or what's another business? IBM. I mean, God, good Lord, that thing just keeps chugging along, right? IBM just bum bum bum. It's been at the forefront of most of the innovation. Now we could probably get into some conspiracy theory here. It really.
They've had a few missteps.
Oh, they
They've had a
have.
few
Okay.
missteps, but overall, it's been a wonderful company.
So okay, so that transitions us to the last point, which is artwork. So we're coming from digital, what's considered artwork, to actually physical artwork. What are your thoughts on artwork?
I'm 39 years old, and I do not own a single family home. So I currently have zero artwork hanging on the walls of my non-existent house. Oh, artwork, Warner, it's a store of value. There's a lifestyle. Staring at a beautiful painting. There's some stuff out of Europe that's. I went to the again Chicago Story. They have a wonderful museum in downtown Chicago, and I'd love to go down there and relax and look at some stuff. And they had different exhibits. Some stuff would come through and it'd leave. There's a certain painting I love to look at that represented to me something very spiritual, and it was a cord. It was a young man holding this three or three ropes or intertwined three ropes, and I could just stare at that thing, and there was different meaning to it. And again, I mean, this is a priceless piece of artwork, and I probably several autistic nephews that are going to know exactly what this piece of artwork is, but it's in Chicago, or it was. Don't know where it's at now. It's a gentleman holding a rope, and I could stare at that thing for hours and just keep learning about what the painter of this thing was thinking and what he was trying to convey. Would I like to put that in a cabin in Wyoming? Sure, but that's a lifestyle investment. It doesn't pay me to own it. And second, if things melt down, now I can't transfer it digitally. I physically have to get this out of Wyoming. I have to physically move this piece of artwork. So I'm not a big fan of it, but I definitely love art. I'm a fan of the arts, but I don't particularly own any rare paintings. What are your thoughts, Warner?
So when it comes to artwork, yeah, artwork is always in the eye of the beholder. And one key thing that I've learned about artwork is that if you're going to buy artwork, the having the ability to prove that that artwork is what it says it is. So, for example, if you have a artwork from a famous artist, do you have the documentation proving that that's from that famous artist? Do you have a trail leading to you? Have you seen the history of that piece of artwork to make sure it's not a forgery? There's a lot of things that professional art guys take into account when buying a piece of art. Now, if you're not buying, let's say, a 10 million or whatever piece of artwork, and you're just buying, let's say, $1,000, it's still important getting the papers of the artist, picking an artist. Like if you're going abroad and you like some art, okay, if you like a pot or a piece of pottery, I learned this, I think, in Chile. We went to this really cool, unique store I found with local artists, and they actually had the the pottery, which was beautiful, across this entire store. I remember it, like in the outskirts of Chile, Santiago, Chile, and they had proof. They had papers, like stamped paper, saying that this was the artist, that he signed it. So at least it was in the step. It could have been a forgery, yeah, but this was a reputable shop, and they had signed paperwork with emblems on it, and information proving that this piece of art, and then on the bottom the art was etched in his signature, which is unique to that artist. So if you're going to buy any type of artwork, always making sure that it's a well-renowned artist, so the value will go up in case, let's say the artist dies or he only produced a certain amount, and then you have proof that that artwork came from that artist. I think that's important. Now, as a store of value for money, I think if you look at most people that get into art, with the exception of art brokers, that's their job, they're mostly buying artwork when they're wealthy. So they're starting out with some sort of business that has cash flow, and then they get to a certain point where they're like, oh, man, I'm so tired of buying more businesses, and they buy the piece of artwork that you're talking about because they're now worth $1 billion, and that artwork, when they were a young lad like yourself, that spoke to them. So I think art is more of like an old man's game. That's a wealthy
Yeah,
man that's already made his money through multiple businesses. And then now here's another thing about art. When people were fleeing Europe or different areas of Europe from persecution and totalitarianism, the interesting about art is, I was told the story, they would just, I guess, cut the artwork, the really expensive artwork out of their picture frames, and then they'd roll it up, put it in a sleeve, throw it on their horse along with some of their gold, jewelry, the most valuable stuff, and they'd ride off in the distance. And after the war had passed, or the totalitarianism, their lands, they still had deed to their lands, they'd just come back in, put the artwork back up, throw the gold back in the chest, and go get back to business. So in terms of like
Simpler times,
in
Warner.
terms of wealth, there's three things that have transferred wealth the most efficiently over the years. Now we're in a digital age, which is a whole different scenario. Three things that have transferred wealth have been artwork, real estate, and gold. Gold, those are the three things. So there's no denying that we haven't discussed real estate. The challenge with all those three things, gold, real estate, they're a great store of value to take things from A to B, and if you have time to sell it. What Mario and I are talking about is in a stable functioning economy, which we could argue it is or it isn't, you have this access to cash so you can buy a business. Now, when we
That's right.
talk,
Well, artwork. Let me
yeah, go
jump in
ahead.
here, Warner. Is it a store of value? Yes, but is it a place to store a bunch of cash into this valuable piece of artwork? No, because you have to sell the artwork in order to go buy a better asset that's going to pay you to own it. So, like I said, an old gentleman, or like you said, an old gentleman, it's an old gentleman's game. It is a lifestyle investment. It's an investment. It's going to hold value. But as far as a place, or this whole podcast is really about where do you stack up that $2 million to ride out a financial storm? The problem with buying a rare piece of art is when you want to go sell it, it could take quite a while to find the right buyer at the right price. Those are my thoughts, Warren.
Yeah, so we've kind of narrowed down gold, Bitcoin, artwork, and we've seen that all these places are interesting stores of value. I would say Bitcoin's not a store of value. It's, if you want to protect your money, yeah, great, but who knows how much money you'll be protecting after things gone to zero, or it's gone up 200,000, whatever it is. You have no idea. It's completely speculative. Gold and artwork, way more stable. So if you want to store your value, go into those things. If you're interested in stacking your cash, and there's one we haven't talked about. You put the cash in a pit or under your mattress. We haven't talked about that one yet. Maybe we'll do a whole nother podcast on that. So, anyways, the most efficient route for Mario and I is right now is a money market, because
That's
if
right.
you Mario had a great point. I think it was about a few months ago, where he said, I'm picking the least of all the evils." So it's like the least of all the evils is the U.S. federal government. There's no other government on the face of the earth that has the clout and reputation that they have, and the money markets are investing in the U.S. federal government. So really, at the end of the day,
That's
everything's
right.
tied to the dollar. If that thing goes sideways, then I would argue that the best option is beans, bullets, and band-aids. It's survival. The smart guys are thinking
That's
about
right.
that. At the
That's
end of the
right.
day, I don't care how much gold you're carrying around. If you don't have a way to protect yourself, you don't have a way to create shelter, if you don't have a way, number one, we're getting a little bit of a prepping blog. The number one thing that people overlook, which I would be the number one thing I'd buy for your kit, would be a water filter. MSR makes like a $400 water filter. It can filter about 2,000 liters, which is about 1,000 gallons, I think. I'm probably off in those numbers. That filter, $400 filter, is worth its life in gold, because the first thing that's going to kill you, and most people never talk about it ever, is water. Water. That's your number one. If we can't do gold, if we can't do artwork, if the money markets are gone, if the whole thing's going down, your most precious asset is water. Because if you don't have that, you're going to die quickly. And I know I got a little intense there, Mark.
No, I think the second. No, you're giving me goosebumps. I think the second most important thing after water is feeding yourself some protein, and like I said, hardware. Having one or two or even three pieces of hardware you could pass out to your buddies, and you go out in the woods and put some food on the table. So you got clean water and you got something to eat. I think
All
it's
right,
smart.
man.
I think we
Yep.
can land. Like, yeah, we can land the
Yep. All
plane here,
right.
Warner. What your final
Nope.
thoughts?
Thank you for your time and effort, and I appreciate You spending 2 hours with
Absolutely,
me a
Warren.
week on these podcasts. It's a pleasure.
Yeah, it's an absolute pleasure here, Warren.
All right.
Thank you. Blessings. Take care.
Thank you for listening to the Red to Black podcast. We really appreciate you taking time out of your day to listen to our podcast. If you would like to connect with us in the future, you can find us on LinkedIn. Simply search for Werner Minchell or Mario Parzino. Also, you can find a link to our LinkedIn profiles in the profile section of the podcast. Thank you again for listening, and we look forward to connecting with you in the future.